Welcome back to the Precision Trader University. In this video, I want to once again show you how you can be a top level scalper and day trader in the stock market using some very advanced trading tools and strategies. With that said, we're going to jump right into it. We're using here Bookmap, the #1 order book available in the market. Again, it allows you to see where the vast majority of the buyers and sellers are sitting in the stock market looking to get orders filled. And why is that knowledge so powerful? Because we know that the market gravitates towards large levels of liquidity. And then when it gets to those large levels of liquidity, we have 3 extremely powerful strategies to take advantage of those levels, whether that being playing to them or once it gets to them, taking advantage of it at that spot as well. So with that said, the Bookmap allows you to see all the major liquidity based on a heat map. The orange and red levels are what you're looking for. And again, those levels primarily are major liquidity. It's going to be things that we can see on the $5 increments. If you come over here, you can see 200, 205, 210, again, $5 increments. Where is the major liquidity? Where's the orange and the red sitting on those times? You don't have to worry yourself with looking at all, the amount of orders that are sitting here. Again, Bookmap does it all for you. Okay. You don't have to focus your mental energy there. You just identify, again, a lot of scalping and day trading is how can I make this as simple and as powerful as possible? A lot of people want to make things extremely complex. You got to do this, these 15 things got to line up, and then again, if you want to be successful for the long term, you need it to be extremely powerful and extremely simple. It's really boils down to that. The more moving parts you put into it, the more likely you are to fail with something. That's just the reality of it. So with that said, the major $5 increments, if we can see orange and red on that, that is a major level of liquidity. It's that simple. Okay, once we have identified this major level of liquidity, okay, from there, now we have our bias. Now we're like, okay, we're in this case, so we're looking at Tesla here in the pre-market. So looking at Tesla in the pre-market, let's say you're very interested in trading Tesla for the day. Where is your bias? Where, based on the liquidity, where are you looking for Tesla to more than likely gravitate towards? Well, monster liquidity down here at 200, good liquidity there at 202, a lot at 205, 206. We're starting the pre-market 210. It started at what, 210, 211. So again, your expectation for this thing to suck right down in to that liquidity. So let's see what happens at the open. At the open here, Tesla proceeds to suck right down into all of that major liquidity. All right, now, as far as how you play it, well, one way of playing it is you let it get to, a lot of people love this one. They want to find major liquidity, and they want it to come down to it because they're always wanting to buy the dip. They always think to buy the dip is the highest probability. No, I hate to break it to you. Buying the dip is not the highest. Buying the dip at major liquidity is not the highest probability strategy at all. I can assure you that. I've spent enough time studying all the different ways to play liquidity. I can assure you it is not the highest probability. You're gonna get it handed to you if that is your primary strategy. It's not even a part of my big 3. Okay, so again, we're not buying at major levels of liquidity to the downside. Okay, if we're going to play major liquidity to the downside, okay, we're going to play the push through strategy. All right, PTS. All right, so when we find a major level of liquidity like this, we want to see on average, it's a $1 dump through that major liquidity. That's what we want to see. When we get that, we know our probabilities go through the roof. Okay, so for example, with Tesla today, based on this, where's your monster, the biggest liquidity here that we're all right around? Right here at 200. So what do you think our play was? What do you think our entry was? 198 to 199. That was our entry zone right there. All right. So the idea is you want to enter right, if you want to start your position right there above 199, that's fine. But again, the sweet spot is 198 to 199. So with that said, we also did this for BABA today. So with that said, let me show you in the server where we sent these plays out, because I know I got some people that are like, oh, he's saying all this stuff after the fact. No, not the case whatsoever. Okay, we got BABA 58 to 59, and all these plays come with a screenshot. At this time, Bob was at $60. Okay, so this came out there when I sent out Tesla. Tesla was still between 200 and 201 when this was sent out. Our entry was 198 to 199. So with that said, that was our entries. Let's see how that worked out. All right, so flip it back over here to Bookmap. So we get our beautiful push through, comes right in here, pushes through the major $200 liquidity, pushes through there $1 to $2 for us. All right, we come down to I think it was 198.50-ish, which was beautiful because we knew the money back to 200, this major liquidity right here at 200 was guaranteed. When I say guaranteed, it was absolutely guaranteed that they were going to come back and retest this $200 liquidity today. So we love situations where we get guaranteed money. So anyway, quick pump back up to 200, blast back up there, no time. They push it up to around 201. Again, this is where I was encouraging ones. Hey, we get this nice pop in our favor. You want to hold a runner position? That's fine. Okay, but we're going to play it safe, and we're going to take a big old chunk of this off, at least 3/4 off on this pump to 200 to 201, just to be on the safe side. All right, so from there, they come back, they pull back. We start having buyers come here at 200. They hold it, support. What do? They blast up. Where are they blasting to? We know there's major liquidity. Again, even if you, here's a secret, Bookmap secret, even if you can't see it, okay, when you're pushing up to major $5 increments, I can assure you there will be liquidity on there. Even if they don't put it on there before, like you could see here at 203, I can assure you they're going to have some sitting there at every $5 increments, whether that be where you can already see it or they're just hitting the bid at that spot. Okay, so again, it's going to happen. So prime example here, they push through. You had some liquidity come here at 203. They blast straight through it. Okay, they blast through. They come back, support, and we know from one of our other strategies, our momentum strategy, one of our 3 strategies, the momentum strategy. This is textbook here. Push through. Okay. Push through, absorbs it, comes back, support, wick. Where are they going? They're going to the next major level of liquidity. And in this case, we know that there's definitely major liquidity on the $5 increments. So with that said, they push up to it, 205, bam, they dump it. Where do they dump it right back to? Right back to 203 to this liquidity. And that's the make or break. That's where they have to prove whether or not they can hold it or not. And as we can see, they held it. So, and then from there, continue to push. And then, of course, this is getting towards our no more trading time of the day, so we don't care what it's doing there. All right, so that was Tesla. Free money on Tesla this morning. What was our other one? Baba. Okay, so Baba. So we knew that there was monster liquidity sitting at 60. Okay, and if you come here in the pre-market, what do you see here in the pre-market? Lots of liquidity down there at 62, 60, all in this area. All right, so your bias is to the downside. Even though they've already dumped this thing a lot, your bias is still to the downside. Again, you're playing towards the major level of liquidity. It's just if you're not playing towards major levels of liquidity, you're going to be in essence trying to defy gravity. And that's not always a very good thing at all. All right, so with that said, they bring it down. So again, we knew that 60 would be the monster liquidity, and it was. As soon as the market opened, bam, 60, monster liquidity. Again, can you see this on a $5 increment? Absolutely. Absolutely, $60 can be seen on the $5 increment. So we come down to 60. And again, in a volatile market like we're having right now, we're playing the push through strategy. That is our go-to. Okay. We are not only is this coming down, okay, coming down to major liquidity. So when we're coming down to major liquidity, that's when we want the push through strategy even more. Now, when we're going up to the upside, a lot of times we're doing the SML, the short at major liquidity. We're shorting right at it, right there in front of it. Bam, playing that sweet profit, down, on the pullback money where people are taking profit. So when they're taking profit, we're making profit. So with that said, 58 to 59 was our entry target. So we get down to 59. They continue to bleed it down. SPY was pulling down. We knew SPY was getting to the S&P was getting to a spot that it wanted to pop. So we were extremely confident about this entry. So anyway, so 58, they start loading up here at 58. And that just gives even more conviction that we got a really good spot. We know we got to push through. We know they need to go back and retest 60 today at a minimum. they got to retest $60, that major liquidity. All right. So for us, again, we were in another free money situation. And a big part of that is we were patient. Okay. We patiently waited for that. We identified the major liquidity. We let it get to that spot, and then we let it push through on it. Because we know when we get that push through, we're getting guaranteed money back to the major liquidity. So again, the highest probability money in the stock market is the push through strategy. I can guarantee nobody's going to beat the probability of the push through strategy. Push through strategy on major liquidity. It is 99. When I say 99% probabilities, yes. When you're playing it back to the major liquidity, 99% of the time you will get your, make profit back to that major liquidity that it pushed through on. So it's just a matter of you being able to identify it and, enter, exit, all that good stuff. So, I mean, it's so rare. In the past year of using this, two, maybe three. And honestly, honestly, I'm just saying 2 or 3 because I can't remember one, but I'm just like, okay, surely there's gotta be one. So that's how rare it is to get stopped out. And again, we got hundreds of trades using these Bookmap, so this ain't just something this is stuff you can find every single day. Okay, don't feel like this is just, oh, well, this just happened to be this one day and it worked right. No, every single day you can take advantage of these three Bookmap strategies that I've been able to find and share with everyone. So anyway, so with that said, that's Bookmap, or that's Baba and Tesla. Made beautiful money on those today. We got to our no more trading time of the day. We shut it down. That's it. As day traders, scalpers, our trading day is the first three or so hours of the day. We let the gamblers, computers, all that kind of, let them chop each other up in the last three or so hours of the day. We don't want none of that junk. So anyway, we hope this video helped you. Also too, I do want to do a short little session for subscribers on the SPY ES. We know that SPY ES leads the market. So again, being able to understand where SPY and ES is likely to turn is extremely powerful for our overall trading of the market. Because again, one of our other channels is SPY ES, so we call out trades there as well. So let me flip over to SPY ES, or Trading View rather. Again, you can do this on the SPY ES. You don't have to, or SPY or ES. You don't have. It doesn't matter which one. The candles are going to be the same. It doesn't matter here. So with that said, all of our Bookmap knowledge, all of our indicators, right? For example, here on the chart are all in the indicator course 2.0. If you don't have it, not exaggerating when I say it is by far the best indicator strategy course out there for scalpers and day traders. Again, if there was something better, I would have already found it because I've looked high and low. So sadly, I had to do it myself. So with that, and you talk to somebody that's got it, and I can assure you they will agree with me. All right. So first things first, we know one of our first things to take advantage of every day to keep an eye out for is the opening range break. Now, opening range break. Again, this is always done on 2-minute time frame. Okay, so there's the zone for the 2-minute break. So now they faked ones out to the bottom side here. So somebody would have been playing the textbook opening range break. They'd have got stopped out here. Because again, it pushed down and it came back, blasted through the top of it. There's your stop out. But here's your key with the opening range break. More times than not, especially when you got plenty of volatility in the market. Again, opening range break is more for higher volatility times of again, when things start getting slowing down, the volatility decreases. I mean, you can get chopped up with this strategy left and right. Because again, it's the most basic strategy there is. I mean, it really is. So again, you take a 2-minute candle and you go above it, you go above it, and you're playing calls or long. If it goes below it, you're shorting and buying puts. So, but with that said, you would have got stopped out to the bottom side. But if you'd have got right back in there and played to the upside, you could have quickly got that stop back. A nice little $1.50 push there. So the open range break, 50 cents to $1. on SPY is what you're looking for, or corresponding stock. So anyway, so that was the opening range break. Again, this right here is our indicator box. When we have 10 plus indicators all grouped up in one area, this, we put a box around it because we know that is a huge area of liquidity. And we know that the market on average, what they'll do is they'll try to push out of it $1 or $2, and they're going to suck right back into it just because it's monster liquidity. So with that said, let's see what happens here. Put all the indicators back on. So we see this morning, we get multiple pushes up to the monster algo here. Again, if you're not familiar with algos, these are computer traded levels. Okay. Again, you got to have institutions and computers have to buy and sell off of, they have to have, hard, fast calculations, numbers that they buy and sell off of. Well, algos are that. These are calculated areas where they buy and sell. So from an intraday perspective, I mean, they give us a superior advantage over the market to be able to see precisely where there's likely to be buying and selling on the market. So again, in essence, what this is, these algos they are Bookmap levels, high levels of liquidity that you can't see on Bookmap. Okay, so but they're there. Absolutely. So prime example of it right here. You see the monster here, the turquoise one, push up to it multiple times this morning. Bam, rejecting right at it. We see here it comes back at later on in the day. Look at this. Rejecting. Okay. This is not just, it just happened to do that. No. And this is absolutely, we've seen this countless times. Anybody that spent any amount of time with us using the algos, you know that the algos are, amazing. I mean, it's just, undeniable. With that said, we did have some computer candles laid down today. Let me see. We had multiple computer candles to start the day, which is, you don't get a lot of that. So one right here. Now with a computer candle, we know what our calculation is for the two-minute time frame, what calculates a computer candle, and we're only going to get back 50 to 100% on a computer candle. Well, what do they do here? They get back 100%. And then they lay down another computer candle right there, monster right there. And what do? They get 50% back, they bounce, they eventually give 100% of it back. All right, they lay down, hold on, let me see. I'm pretty sure this was a computer as well. Yes, another computer candle right here. Laid down another one. What do? They came back, gave 50% of it back, and then they had to, again, they have to come to that 25 to 50% mark to prove that they can hold it. Okay. So at a minimum, 25 to 50% is very safe in regards to our, in regards to that. So we did have a vertical breakout that they cut short this morning. Anybody knows, you know how to calculate the vertical breakout and how that is by far the most powerful price action strategy in the SPY ES. I mean, that's it. It's the ultimate. So it's worth its weight in gold. Yeah, digital gold. So with that said, as far as where we came down this morning, again, we're looking for a $1 to $2 pull out of this area and a suck back into it. What do we got? $1.50 here. They sucked it back in. $1.50 sucked it back in. $1.50 down. They sucked it back in. Pushed up here. What is it? Still $1.50. Yeah, $1.50. $2 here. Yep, $2 there. Bam, sucked it back into it. And now finally, they're trying to break away with it. They just threw down an ignition candle. Ignition candle. Again, if you don't know ignition candle, you got to get the course. What qualifies ignition? That right there, that's a clear sign. Again, if I was trading the middle of the day, or if this was earlier in the day, I see that right there. They get up on top of the algo, ignition candle. That right there tells me, they want to go higher. Yep, they want to push this thing up to 380, 381. So yep, that is pretty much it for the day. Other than that, as far as when we came down here today, beautiful stop here at the major 15. Had an algo major 15. Again, we have the big 6 moving averages that we use from different time frames. Extremely powerful. So with that said, that'll do it for this portion of the video. I appreciate everybody for taking the time to watch it, and I hope that helps you out. Enjoy the rest of your day.